Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream, Friday, November 5th. We are back with AIML. Amazing news this last couple of days. I think the company really has a path to 10x right now, where this stock could be trading at $5 plus. We're going to have Tim explain to us the exciting details. And for anybody that's brand new to our program, our goal is to bring you those stocks which have that 10x to 100x upside potential. So these are companies that are going after multi-billion-dollar market opportunities. They are at a key inflection point in their growth. And number three, they have multiple catalysts in place to ignite that increase in shareholder value. That's kind of our magic formula for finding 10 baggers. And we've had 9 stocks that have increased between 1,000 and 5,000% in the last 18 months or so. We're just waiting now for AIML to join that pantheon of greatness, Tim. So now you have the news, which I think this is the catalyst. This is the inflection point. So let's get right into it. You just announced a contract, which I want to kind of get into the details. This is with Rapid Test and Trace. This is a COVID testing. It's a SaaS. It's with your HealthGauge subsidiary. So it's a SaaS contract, and this potentially could be worth $7 million plus revenues in the next 12 months. Then you got the Tech to Health business, which is another couple of million. So there's really about 10 million plus in revenues that are in the pipeline right now for the next 12 months. And as we know, the health tech space that you're in, the SaaS space, trades at 10x revenues at a minimum. So in theory, that could be worth 100 million plus. You're trading at, what is it, 15 million market cap right now?
15, yeah.
15 million. 15. That's Canadian, right?
Yeah, that's right.
And actually, some of these SaaS deals are trading at 20x to 50x. So, I think usually stocks tend to kind of overshoot. So really, if you kind of hit a run rate, once you kind of hit that run rate of 10 million, people see like $1 million a month revenue, even 750. The stock, I believe, can very quickly run up to like a 200 million market cap. I don't know if you'll be able to hold it, but you'll be able to get to 200 million, which would be a 15x from here. So let's talk about this new deal for HealthGauge. Give us the details there.
Yeah, love to do that, Jack. And I hope you're right about how the market views us. So just to back up the quick explanation of this agreement that was signed between our subsidiary called HealthGauge and a company called Test and Trace Canada. They are the largest COVID tester in Canada. And they have a need in that while they're supplying mostly B2B, some retail as well, but mostly B2B customers with COVID tests, these customers have been coming back saying, what we need now is a verified test, meaning some way that we know that our employees have actually taken the test and we know what those results are. So they approached our subsidiary HealthGauge and said, can you help us develop a protocol that verifies this test? And so that's what HealthGauge did, was develop that end-to-end model using the Test and Trace Canada's testing and their nursing staff and their customer base and so on. But our infrastructure, our technological infrastructure through which this testing will happen. And so the upshot of it is that for each one of these verified tests that goes out the door, we get paid $2.50 per test. And there's no variable cost to us because all the variable cost associated with that is being borne by test.
And this is okay. So it's $2.50 per test.
Yeah.
I mean, it's almost all. I don't want to say it's pure profit, but it's pretty close because it's all software.
Sure. So the analogy that I think is fair is it's like HealthGauge built a super highway and it's done. Yeah. The highway is ready to be used. And now a trucking company comes along and says, we want to send 50,000 trucks down your highway each month. and we'll pay you for the use of that
Paul,
and for the
okay.
maintenance of the road. So that's what this contract is.
Okay, so the magic question is, okay, how many tests are you going to be doing per month? Because I know it's in 5 countries for now.
You're right. So the contract that was signed is for 5 countries: Canada, U.S., Mexico, so covering all of North America, plus UK and Australia. And Test and Trace Canada has committed to 50,000 tests per month per country. So when you do the quick math, that's a total of 250,000 tests and about 625,000 revenue is what they've committed to doing by March 1st next year. So when you extrapolate that out over a year, that's about $7.5 million contract, and that's SaaS revenue. So that's reoccurring revenue.
Okay, so it's it's amazing. Okay, so this is not like something 5 years out. It's not. It's you have a contract. The revenue. This thing is going to start going. When is this going to actually go? When are you going to start?
Yeah, so the platform that was designed for Test and Trace Canada is expected to go live at the end of this month, end of November. So we're expecting revenue from day one.
Okay, so in a few weeks. So you're going to start. Okay, and they're going to scale quickly because these guys. These guys have a large organization, so they have. I mean, they're doing volume
so
now.
They're already the largest testing company in Canada, and they literally service thousands of companies today. So this is not a new business model for them. Just doing a verified test is an extension of what they're already doing. So they are already knowledgeable as to what the uptake will be, what the traction will be, and so on. So we go live with this thing at the end of this month, and they're comfortable in committing that by March 1 of next year, that they'll easily hit 50,000 tests per month per country for the 5 countries.
So bottom line is you have a commitment basically, which is going to generate by March, which is only 4 months away, $650,000 that month per month.
That's right. Yeah, 625. Yeah, that's right.
I'm shocked. I'm shocked that the stock is still trading, where it is right now. I mean, this is like a major game changer. This is major game changer news. I mean, this is what our whole platform is about. The next super stock platform is getting in those companies that are, at that right at that inflection point, right when they have the big catalyst and which that transformative catalyst. And this is happening right now. And for whatever reason, the market hasn't caught on because what is, Tim? I think when you first debuted on our platform, it was almost last, I think it was January or December. You might have been a little bit early. Sometimes that happens. Sometimes companies are a little bit early. It happens, right?
Yeah, it does.
And then the story develops. Then and actually, there's a lot of stuff that's been happening kind of behind the scenes with AIML in the last couple of months, including the Tech to Health deal, which we're going to talk about. You're making other acquisitions. So so the company has really been evolving, and it's amazing that the company is probably like right now. Okay, so let's say in theory, you could be trading at 75 million valuation right now easily, which is basically $1. The stock is less than that. You could easily be $1 right now.
Yeah.
Actually, no. Excuse me.
Beyond a doubt.
The market is kind of people have. I think people have kind of because sometimes what happens when companies they start out, they're a little bit early, then kind of people they get in, then they give up. That's how it happens with investors. And this is the irony. Just when everybody gives up, that's when the thing actually starts to take off.
Well, as you and I know, the beauty of the stock market and the reason why we're all in it is because it's a less than perfect indicator. The reason why there's money to be made is because there are undervalued situations on the market, and we believe that we're in that situation right now. And so now it's a matter of 2 things. Number one is showing people that what has been just potential up until now is being realized and being turned into hard contracts and hard dollars, and to continue to spread the word, getting out on programs like this and letting everybody know who we are and what we're doing.
Yeah. Wait. So, Tim, so
We're
bottom
young
line.
companies.
Wait. So, the bottom line is, I mean, this is. I mean, it's really incredible. I mean, it's like we're just talking about like, hey, it's no big. This is a major deal. You're gonna have
Sure.
by March, you're gonna be able to show 650 grand revenues that month on a
Right.
monthly basis. And by the way, and so here's the thing. I think also the other thing is, look, this is just a small deal. Like this is like a COVID deal, and the COVID. I wish you would have had this, 12 months ago, 18 months ago. This would have been like the stock would have been already up 100x. You would have been our first 100 bagger.
Sure.
But okay. So the thing is this. So this thing is going to go on for quite a while. The COVID thing is not going to go away. So
No, no.
there's legs to this. But I think the key takeaway is this: you're not AIML is not a COVID play. This just happens to be a
No,
tiny
not at all.
portion. This is just and you're going to be doing other things with this health gauge, other health tech, remote, telehealth type deals. We're going to talk about
Yeah.
the platform. Then you have also the Tech to Health, which is the mental health app,
Yeah.
which is going to be huge in Europe and and potentially globally. So that's just
Completely.
one. I think what it does, I think this new contract and the revenues is just going to validate that, hey, this is a real company. People are going to realize
Sure.
it.
You're absolutely right. So there's several things I think that people need to take under consideration with this. Is that yes, so we're expecting revenue from this one particular contract. It's come in at about $7.5 million per year. It could be substantially more than that because this is covering only 5 countries. And this was the amount that Test and Trace Canada was willing to set as their minimum requirement in order to keep exclusivity. And the reason why they were comfortable with that minimum was because they really do believe that's going to be their minimum. And so we could see substantially higher revenues come in from this contract, both in terms of sales from these 5 countries, but also turning on the spigot with other countries. There's no reason to limit it to these 5 countries. That's number one. But I think number two, the bigger lesson in this is that this platform, this AI cloud-based platform that HealthGauge has developed, it can be reconfigured for multi-uses. This was one.
This is one use. This is basically just one small use case.
Exactly. This kind of came at us out of left field, just over the last month or so to satisfy a particular need from this particular company called Test and Trace Canada. But it's not even what our core business is about in HealthGauge, and that's using this wearable that is the HealthGauge proprietary wearable to monitor your health biometrics. And our model with respect to that is a B2B model where we're working with large medical industry companies, insurers, hospitals, ACOs, and so on, to get this device onto the wrists of their clientele, their patient load. And that's really our core business. But so what this particular contract demonstrates is that there's tremendous ability for us to reconfigure this platform quickly for multiple different uses, and we are looking at a number of different potential scenarios that do that right now. So we are expecting several more contracts to come about in the near future. So exciting stuff.
Okay, so what's interesting is this. So essentially, AIML, right? You're a health tech holding company with a focus on AI, artificial intelligence, machine learning technologies related to health, right?
That's right.
Okay, so now you have two operating subsidiaries. You got HealthGauge, which has this big news just now, which is potentially a deal worth $7.5 million plus, maybe $10 million this year, next 12 months. Then you also have Tech to Health, which is, I think you own, what percentage of that?
So of the global market, so of the master company in France, we have a 22% interest. And of the North American market, Canada, US, Mexico, we control 70% of the rights to that market.
And their focus essentially is it's a mental health app.
That's right.
Okay. So it's a mental health app, which is, it's a hot space right now. And what's interesting is in Europe, I know there's, by the way, we're starting to hear about a lot of different, health tech apps. And it's a big thing. There's in the US, there's a bunch of different startups, etc. In Europe, not so much. So these guys, and as well, every market is different, right? So, you have, obviously Europe is, huge space. All right, so it's a mental health app. And what's interesting is, maybe you want to add some color to this, but so
Sure.
these guys have, their focus is on the enterprise space,
Yes.
large contracts, where, companies which have, hundreds of thousands of employees, they get onto this app. And they already have, they signed, what is it? They have 2 deals right now, which are worth a couple of million as a starter.
That's right. So in the first month of opening their new platform, they signed 3 contracts, 2 with insurance companies, very large, prominent French-based insurance companies. And the third is with a multinational industrial corporation with about 180,000 employees globally, operating in 5 different languages all around the world. And Tech to Health's contract is to supply both wellness products and mental health products to the employees of that company and insured people that belong to those insurance networks. So we estimate the value.
The main idea is this is still in the early stages. I mean, this company basically just launched now. Like this is
exactly.
So you have all the stuff you're talking about between, right now we're talking about 10 million in revenues. That's contract, in between HealthGauge, Tech to Health, which is, and this is just getting started. I mean, it's not like you've been around for 20 years. This company is like really brand new, basically.
So, we're less than a year old. Sure. I mean, we listed publicly in January of this year, and there was a little bit of legwork getting it set up prior to that. So we're still in our first year of operation, and so I think that we're on the right path for sure.
This is. I mean, it's really interesting. Sometimes the biggest winners that we've had, the stocks that have become those 50x plus stocks, 20x, 50x, they kind of start off slow. It takes a while for maybe the market to understand, and then they hit that inflection point, and then all of a sudden, the momentum starts kicking in, and people all of a sudden there's that aha moment, which I think that investors are going to start having.
And I think
they haven't had it yet. Even though we'll probably get it next week.
I think that part of the reason for that is because both these companies that we've invested in, their business model is B2B, and of course the business development cycle, when you're talking to large multinational corporations, it's a longer, slower business development cycle. It takes longer to sell them, in other words. But when you sign a contract, you're not selling one watch. You're signing a contract covering hundreds or maybe hundreds of thousands of workers or insured people that belong to that network. And so one sale is significant. It's in the millions of dollars, and we've proven that. And so these first 3 contracts that Tech to Health has signed in their first month of going live with the platform, we estimate the value of those contracts combined to be worth about $5 million. And again, that's a real conservative estimate.
That's Tech to Health, right? So
that's Tech to Health.
And again, that's just in the first few months. So potentially, I mean, I don't want to extrapolate whatever, but in theory, if they got $5 million in contracts in just in the first couple of months, and again, those contracts it's over a couple of years, right? Each one or whatever. So it's not. So
that's right.
So I kind of assume, okay, if they're getting that type of market traction, to me, that says 2 things. One is, okay, these are real. These aren't small companies. These are massive This is big insurance companies, and also Europeans, French are very conservative. So
They are.
if they get it, if they're buying this, it's a big deal. And also there's that European mandate, which is going to drive. There's a lot of tailwinds that are going to be pushing business towards this tech to health. But I mean, it's massive validation that you have these, basically blue chip customers that
Mhm.
are going to be spending millions of dollars, and this is just in the first few months. Potentially, I mean, I don't know. Again, I don't want to extrapolate, but what prevents tech to health from signing up 100 million business in the next 12
Right,
months?
and I can tell you that with a previous version of their platform, which was uh, just a pale shadow of what they have today. This is a much more robust, complete end-to-end solution. With that first platform, they were able to sign contracts with 5 major insurance companies over the course of about a 2-year period, and book about $4.5 million of historical revenue. And that was before the governments in Europe have mandated the payment for digital mental health, which they've now done starting in 2022. So it's a different ball game, and tech to health has a much more robust, complete
Tim, what I
platform.
would say, is that we've
Features,
done a
right?
bunch of interviews on our site where which talk about different, real details about
Mhm.
tech to health, the health gauge. So
Yeah,
anybody watching now, they should check out those videos where we have demos that we've done with. Just look up on Wall Street Reporter channel, health AIML. So there's like
mhm.
a dozen videos, so people can get the real details. But I kind of want to close on this note, like
Yeah,
essentially you're a artificial intelligence, machine learning, health tech company.
yeah,
Your model essentially is a I don't want to say a holding company. I mean, you're doing M&A. In other words, you're growing through
yeah.
the business. You're growing through M&A. So you're going to be. I think you have other acquisitions in the pipeline that
We
are
do.
similar to these deals, right?
We do, and it's very important for us when we bring another company in under the umbrella, that there's synergy between the different companies. In other words, we don't want companies that are in any way in competition with each other. We also, it goes without saying, want companies that have the ability to stand on their own 2 legs and survive.
Accretive in terms of revenues, earnings, cash flow.
Exactly. But also, it's very important for us that they have some synergies with our other divisions. And I'll give you an example. With Tech to Health, when they signed this contract with this multinational industrial company with 180,000 employees around the world, and that was for mental health. And once that contract was signed, this industrial company came back and said, this is great, and we're really excited to be working with you people with respect to our mental health needs. But they said, but we have another problem that we wonder if you can address with us. A significant number of our employees around the world have problems with high blood pressure. Do you guys have some idea where we can turn for a solution? And of course, the answer from Tech to Health was, well, we don't deal with that, but our sister company, HealthGauge, that's exactly what they do. That's their sweet spot. And so, of course, those discussions are ongoing right now. And so we see, great opportunity for what Tech to Health is doing to piggyback on
There's a
the
lot.
customer base and
Lot
the
of
network from HealthGauge and vice versa. And
yeah.
so we're looking for these companies that can
There's a
leverage
lot
that.
of value. Yeah, I mean, there's a lot of value that you're going to be adding with all these deals. So it's really,
Exactly.
and you're just again the takeaway. I think people need to realize. Anybody watching this is that basically AIML is really just getting started. This is really
Mhm.
like again, this is like almost like I don't want to say it's day one, but it's maybe day two. I
Yeah.
mean, you have right now just the basis of what the company could become over the next year or two,
Yeah.
which is this health tech holding company focus on AI, machine learning. with these operating subsidiaries, which are could be generating massive revenues. So right now, with between HealthGauge and the health tech to health, you're on track to do I don't know 10 million plus next 12 months, 12
Yeah.
10 million plus a run rate, right? So that should be worth 100 million plus in terms of as a multiple minimum,
Yeah.
maybe 200. And I think what the market is going to be watching now is, okay, what else are these guys going to come up with? Are they going to have more acquisitions? I mean, you have a pipeline that you kind of have hinted at. You've never. One thing, Tim, I think that people, maybe you need to be more promotional. I think maybe investors, are they're used to hearing like companies say, hey, we got this deal happening tomorrow. We got you're basically, you don't really say anything until almost the deal's done, like even the LOI, the thing is closed. So you're not making any crazy projections. So there's a lot that I think people need to kind of
Well, yeah, we're trying to do the Jerry Maguire thing, or the show me the money. We're trying to be more than just shadow puppets on the wall, promising big promises and not delivering. We believe we're bringing some good, fundamentally sound business models to the marketplace, and they're coming through. They're turning the corner into from pure R&D into the revenue streams, and the first revenue streams are significant that we've announced so far, and there's definitely more to come in the pipeline. So we're pleased. It's never enough. It's never fast enough to suit our desires and of course what the market would like to see. But it's building. We're building a strong fundamental base, on which we can leverage into the future. So
okay.
We're pleased.
Excellent. Okay, Tim, last question is, what do you have? Okay, so I think there's going to be more eyeballs coming onto the stock probably the next week or two. What do you have in the pipeline in terms of news flow that people could expect to see from AIML, over the next, into the end of the year, up, in
Okay.
the end of December? What else should people be expecting?
Sure. So of course, this is all a little bit of crystal ball gazing, and a lot of these events are out of our direct control. But what we expect to see is possibly one additional acquisition, and it's in the works, and it's been in the works for a while, and we are getting close to the finish line with it, and we're very excited by it, and it fits very nicely into the stable with the other companies that we've acquired. And so we're hopeful that we're able to cross the finish line with that one in the near term. Also, HealthGauge has been working towards some other strategic partnerships for the last several months. We've alluded to that for a while, and they have announced a few channel partnerships that have come through. And there are several more in the pipeline, and there's a good opportunity for us to see some news flow with respect to some new contracts being signed on the HealthGauge side, and on Tech to Health, same thing. They're also out there working hard with other potential customers, both for their mental health platform. But the other side of the Tech to Health business that we didn't touch on, which is what we were, Fabrice and I were on your program a week ago demonstrating, is their remote patient monitoring platform. And we are expecting some news with respect to the development cycle on that, and some pilot projects going forward. And with any luck, those will come to fruition before the end of the year as well. So there's a lot in the pipeline that we're very excited about, and this is all, again, building the fundamentals of the company to be a real company.
Yeah. So I think here's a comment, question, I guess. I guess this guy sums it up. You got about what 30 million shares out, 12 million market cap. I think it's really 15, right? Fully diluted, maybe?
Approximately 15, yes.
Okay.
Canadian dollars, about 12 US.
Cash. Do you still have the cash? Do you still have 2 million cash on hand? How much do you have right now?
No, we don't, because we made the one acquisition, the one payment into Texas Health for that acquisition. So we're approximately about $1 million.
Okay, and you just got this big contract, $7 million for that one contract at minimum, plus tech. So there's really 10 million plus run rate. You should be at a 10 million plus run rate probably by March.
That is very doable. Yeah.
With between Tech to Health and Health Gauge. So okay. Yeah. Okay, so again, anybody watching, I highly recommend you check out the interviews, the demos that we have with AIML, where Tim and Fabrice, they do the demo on Tech to Health, and we had with what's his name, the Health Gauge, Randy. So there's a lot of content out there. So people, if they want to really get deep due diligence, they could do that. So, Tim, on that note, I want to thank you, and I look forward to getting more updates very, very soon.
And I'm looking forward to being back on your show, Jack. I always enjoy it.
Thank you, Tim, and thank you everybody for joining our live stream. We'll see you on the next one.